Hello, everybody. Welcome to today's live stream. What we want to do is we wanted to catch everybody up as far as the basics of Bitcoin and digital asset or crypto taxes. And to help me do that, I've got my friend David Kemmerer, co-founder and CEO of CoinLedger. David, welcome back to the show.
Thanks for having me back. Always down to walk through, the annoying part of taxes on crypto.
Yeah, everybody loves it, but it's not that people despise taxes. It's just that sometimes we don't understand taxes, so it gives us a little bit of fright. But today we're going to run through it and just to kind of give everybody like a basic information. So we had a great show last week, as a matter of fact, and it was universally liked. This was me, you, and Jordan from Bass Law Taxing crypto, and we went over some pretty advanced stuff. I linked that in the description so everybody can watch that video. But one of the big complaints about this one was it was kind of over some people's heads. So I say, can you guys break it down and talk about the basics? If you are looking for the basics, of course, over at CoinLedger, if you go to their site, links in the description, click on Learn under Crypto Tax Guides, you can see that, of course, if you're in the US, you of course click on the US, but this is for everywhere. This is Australia, Dubai, Canada, UK, New Zealand, Sweden. It's not just, taxes and what CoinLedger can do isn't just for American citizens, it's for everybody. If you definitely want to organize everything, this is the way to go. So David, do me a favor. We'll just click on the US for now because I'm biased and I live here. But just take us through like some of the basics of like, when do we get taxed? What is this? And of course, when do we have to pay it? And when are we not taxed in crypto and digital assets?
Yeah, I think it's helpful to walk through the basics. As you mentioned, I think the government likes to make things complicated, but it really doesn't have to be that complicated. So I'll go just from the simplest perspective and feel free to ask questions as I go. But cryptocurrencies, Bitcoin, Ethereum, etc., are treated as property, a form of property by the IRS. And this has been the case now for a decade. And what that means is similar to other forms of property, like stocks or real estate, you incur what's known as capital gains and capital losses when you dispose of property, right? It's like an investment. So the simple example is with Bitcoin, just like with Apple stock, if you were to buy $100 of Apple stock and then later dispose of it when it's worth $200 or $250, that delta, the difference between what you bought it for and what you sold it for, is capital gains income because you're disposing of property. And the same works for Bitcoin and other cryptocurrencies, right? If you buy Bitcoin for $1,000 and you sell it for $5,000 or dispose of it in any way, you'll incur that delta, that $4,000 of capital gains. And that's a form of taxable income that you'll report on your taxes. So that's the very start. And we can dive into a little bit more along the lines of how much taxes am I going to pay? When do I not owe taxes? Are there other ways that I can owe taxes, even if I'm not trading, buying, selling crypto? So choose your adventure. Which do you think is the best to dive in from there?
Choose your adventure. Okay, I'll bite. So like talk to us about like if you're not selling your crypto, when do you have any taxable events? Because I always thought it was just like you got to sell it to get taxed.
Right. Common misconception, and people will even say, if I didn't cash out crypto, I don't owe any taxes. And that's not true. If you disposed of your crypto, whether you traded it from one cryptocurrency to another, whether you used it to buy goods or services, or whether you sold it for fiat, those are all disposals, right? You're disposing of the asset, and thus you're triggering a taxable event and triggering a capital gain or loss. But let's say you did none of that. What are other ways that you can trigger taxable activity? Well, let's say you're earning crypto in any ordinary way, like you're staking it, or you got paid in crypto from jobs or goods or services that you provided the marketplace. That is what's known as ordinary income, not capital gains income. And ordinary income is just, that's normal income. It's the same as income from your job, right? It's if you earn some amount of value, here you go. with crypto, let's say you're staking and I get 1 Ether staking, I'm going to incur ordinary income for the fair market value of that Ethereum when it hit my wallet. Okay. And so that's how staking works. Same with mining. Same with if I were to earn crypto from a job, right? I'm earning ordinary income at the fair market value of the crypto when I gain possession over it.
Okay. Got it. And then there was one thing to note, which I know people will look at this. I know some people will say, okay, well, I made, like some of you, the degenerates out there have made a boatload of money. And let's say that they were married, filing jointly, and they made $1 million in gains, right? Not just what they spent, but you know, their gains and their airdrops and all the different staking rewards and whatever else. $1 million. So they look at this and go, okay, crap. That means that for the full million, I'm going to get taxed at 37%. But that's not how it works. I mean, we have to do, we look at the taxable income. It's a progressive tax, right?
It waterfalls through. Yep. And keep in mind,
I like that.
this takes into account all of your income, not just your crypto income. So what you do, when you're filing your taxes,
that's right.
Yeah. Is you pull all your income sources. So crypto is going to be one of those sources. Maybe you have W-2 income from a job. Maybe you have some business income and you got like a K-1. Anyways, you take all of your income and you package it all up, and let's say it does equal $1 million, and some amount of that was from crypto. As you mentioned, you're not just taxed at 37% on all that income. Your income waterfalls through. So the first $22,000 of income for the year is taxed at 10%. The next, call it 60,000, is taxed at 12%. Then the next 100,000 from there gets taxed at 22%, right? And you keep ascending the tax brackets until everything over that 693,000, yes, is going to be taxed at that 37%. But it's not that all of the income gets taxed at 37%.
Yeah. Yeah. Which is nice, because you're like, oh, I made so much money, it's all gonna be taxed. But yeah, you're right. So progressive, or as you say, waterfall. I do like that. That's a good one. And then there was this piece I wanted to share with everybody, which was this actually came up yesterday, and I thought it was much lower, but apparently I was wrong. So there's this thing called in the US, and of course everybody's different, right? If you're in lucky Germans, you guys just have to wait a year and you guys don't get taxed at all. But NIIT, the net investment income tax. This was effective January 1st, 2013. And it's taxable. It's for individual taxpayers are liable for a 3.8% net investment income tax. And the threshold is this. Again, married filing jointly, 250,000. So if anything below that, you don't get taxed the 3.8%. Married filing separately, 125,000. So if you make over that in your gains, or also your revenue and also your income, you get taxed another 3.8%. Single ahead of household, 200. Qualifying widower, 250,000. Net investment income includes, but is not limited to, capital gains. So that's a bummer of a deal. You're going to get on top of the, let's see if I can find it. If you're lucky enough to hold for a year, which most of us have, let's be honest, your long-term capital gains are 0%, depending on these brackets. If you're married but filing jointly, it's up to 89,000. You're not paying anything. Zero. Filing separately, 44 and 59. 15% is up to like $500,000 on some of these brackets. And then 20% is also 553,000 or whatever else it is. So on top of that 15 or 20%, you have to also pay 3.8% on this NIIT. And also, and this is what another sticking point was, I've forgotten about this, 0.9% additional Medicare tax. This is in 2013, applies to individual wages, compensation, self-employment income, but it does not apply to income items included in net investment income. So at least we're safe on that. But wait, lastly, me and David, I live in Puerto Rico and David lives in Austin, Texas, which is a great state. And why is it great? The people are awesome. The food is fantastic. And also for state capital gains, you're not in cruddy California paying an additional 13%, or New York at 10, New Jersey at 10.75, and down the road, Texas and Florida for capital gains are 0.0. So, Dave, anything you want to add on that one? Because it was just a sticking point. I had to bring that up because I was wrong yesterday.
Well, I'm glad that I live in Texas and I'm not exposed to state income tax, but not everyone is as lucky. But you have even better over Puerto Rico. You know, you federally don't have to pay as much.
This is true.
Very
I
low.
don't. Very low. I don't have to pay any cap gains except for what I brought with me in 2021. That's going to get taxed regardless.
Yeah, that's significant. Well, hopefully it's helpful to just walk through some of the basics. That advanced video is good, and there's more resources. But I appreciate you having me back on.
Yeah. Before you take off, let's get to the Q&A, and then we'll get you out of here, out of your sauna.
Call booth here.
So David, if anybody's asking, David works at a nice little place called WeWork, so he gets to come in there and use a sound booth. That's why people are like, is David in an infrared room? No. Let's see. How about this one? This was the first question. Hey, Rob, can you ask, how does a different wallets and exchanges report to the IRS? That's a good question. I don't know do they all report or is it just some don't?
No, most don't report very extensively today. Now, as we have covered in the past, that is going to change. But right now, predominantly only 1099 MISCs are reported, which is just reporting any staking income or interest income over $600. That gets reported on a 1099 for most exchanges here in the US. But no capital gains, none of that activity, which is traditionally reported through a 1099B or what will become a 1099DA, digital asset. That is not getting reported to the IRS today. Now, that does not mean you don't owe taxes on that income. It's just there isn't, a 1099 being sent to you. That income is still taxable.
Yeah, and there was, so the reason I'm so big on this is because remember on last video that we did, we talked about a gentleman who was in Texas and inflated his cost basis and held out some different, but it was a lot of money that he skimmed off the top, and he's looking at it's 5 years for every fraudulent count and 3 years for some kind of additional infraction that he did. And that's jail time. So but he had done this in 2017 and 2018 and 2019. So it caught up with him just this year. So that's why I'm like, I want the people that watch me to be, forearmed before they go into it. How about this one? And this is another one. We always talk about this, but Celsius and Voyager and FTX. I got crapped on my Celsius. Can TurboTax suffice? I don't think TurboTax can do anything well, that's not true. If you have a couple of transactions, I'm sure TurboTax is just fine. But CoinLedger, when you do your taxes, it actually can export right to TurboTax. I know it's situation specific. I'm not going the Ponzi route, but I want to be able to claim the losses even if it takes years. We think we talked about this last time. Dave, remember this question?
Yep. Yeah, the last video we had covers it. We actually just came out with a new help guide talking about Celsius bankruptcy losses if you go to our help center. And that discusses this in detail. You can report those losses in CoinLedger. Now, it's dependent on many things, right? So I don't want to get into every single edge on this call, but at a high level, if you've received a disbursement back, you've gotten some amount of assets back from Celsius, maybe your bankruptcy claim is completely done now, you can realize that loss. And I would recommend you read our help center guide, but you can claim those losses.
Hey, do me a favor. Let's go real quick. Is this on the blog posts or where can I find this?
So if you go to help, if you just search on Google help CoinLedger, that will get you to our help center. And there you go. It's on a different domain. And then if you search Celsius.
Oh, I see. Yeah, here it is.
There you go.
What I'll do, everybody, is I'm going to copy this in case you have questions. Let's just put it here. Celsius guide. So now you don't have to search for it. Okay. Looks good. How about this one? A couple more. How do you tax ordinals? I don't Well, it's. I mean, if you sell them, they should be in there.
Exactly. Same way of other NFTs, in that if you bought an ordinal and it went up in value and then you subsequently sold it, you're going to realize a capital gain based on how much you made off of buying and then selling it. So likewise, if you lost money on it, you bought it, went down, then you sold it or traded it, then you will realize that capital loss, and that will reduce your taxable income.
Sounds good.
Now, CoinLedger does not automatically import ordinals yet. That's pretty
new stuff.
Some new stuff. So we're looking into it. Our blockchain engineering team is, but you can still manually import it if you want, and we're working on auto importing all of that.
Yeah, that's good. How about this one? Are wallet transactions on decentralized exchanges tracked? And this would be for, I guess this would be a two-parter. Is it tracked by the taxation government, and is it tracked by CoinLedger?
Mm-hmm. It's one tracked by CoinLedger. Yes, we have no problem importing all of that activity. Just paste in your public wallet address, and we'll pull in and categorize all those transactions with the dexes that you use. Now, keep in mind, if a private company like us has the ability to build that technology, there's other companies that contract with the governments to help them do just that. Chain analysis, TRM, right? And so, are they tracked? It depends what you mean by that. Like, is the government getting a feed of your personal transactions on Uniswap? No. But if they want to investigate you or anyone else, there are a lot of tools at their disposal that they can use to do exactly that. And so that's how I would answer that question.
This makes sense. And then also, I just put in, there's also a video that David put out a while ago, but it is relevant. And he talks about just how easy it is to go through the process of getting things done as far as on CoinLedger. I also did a video myself, and I mean, David's is a little bit more spot on, very nice, and how easy it is to go through those things. But I linked that also there to make it as simple as possible. And I want you guys to feel flustered when you do this stuff. So yeah. How about this one? I can't add VeChain into CoinLedger. I guess this would be like a multi-part one, because there's all these different. There's 1,000 different cryptos. What's the resolution here?
VeChain, I'm not super familiar with how that asset is built. Do we know if it's an ERC20 token or not? It must not be if she's saying it doesn't import. But if it is its own standalone blockchain, we may not have an integration for that at this time. CoinLedger right now supports over 500 different blockchains, wallets, and exchanges. If VeChain is not one of those, I apologize. It's likely just due to we haven't seen enough demand for it. So what I recommend to folks who want us to integrate with their specific chain that they use is to go into CoinLedger, and there's a request, feature request tab, and we kind of map all the feature requests, and people can vote on what they want to see. But as you can imagine, we, supporting hundreds of thousands of users, there's infinite amount of integrations that people want. So always working to prioritize what's most needed and going to help most people. But you can always get things in manually if you need to with a spreadsheet. So that's what I would recommend. I know that's not ideal, but yeah.
Well, I mean, not only that, but you got to remember, so when we talk about this, like if you're moving, because we really care about, not for your portfolio, what we really care about is, when am I getting taxed? I'm getting taxed when I buy for goods, services, and I sell. And usually what you will usually do with VeChain, even if you have it on your specific VeChain wallet, if you need to cash out, you want to cash out, or if you say I'm never cashing out, then the discussion ends here. But if you want to say I need to cash out and take some profits and put that into another currency, or put that into another, or sell it for fiat, it'll probably go into exchange. As long as you have an integration with the exchange itself, it will take that cost analysis and will say, okay, you bought VeChain for 0.02, you sold it for 0.10 or whatever it is, and this is your capital gains from this time frame from when you went from exchange to exchange, even if there was an intermediary of a VeChain wallet. So it should be okay. I had the same problem when we first started 3 years ago with Cardano. And of course, you guys integrated Cardano, but I still didn't need it because everything went through Coinbase anyhow.
Right.
All right.
Exactly. That's a great point, is if we have your buys and sells, CoinLedger can still do your taxes even if you don't have, one of those transfers where maybe you were self-custodying it for a period of time.
Yeah, which is fine. How about this one? How do you avoid taxes? Don't sell your Bitcoin. What do you think, David? Just don't sell. Just don't sell.
I agree. I think it's a good strategy. It's the strategy that I follow. Right?
It's not a bad strategy, actually.
Other ways to avoid taxes, IRAs are a good tool. You're deferring the tax. Using loss positions. So if you're holding on to bags that are in loss positions and you're not too thrilled about those assets, can often make sense to harvest those losses, aka sell or trade those cryptos, so that you realize the loss, and that's going to reduce against any gains or other forms of income. That's another really good strategy that CoinLedger can help with. There's a whole bunch more. We have a lot of content on how to avoid taxes. Just search our blog. We'll have that.
Yeah. How about this one? I live in another country, and I'm using a similar platform for my crypto tax. The program can deliver directly to the tax man if I wish to. Can your site do the same? Love the portfolio tracker. I don't think you guys deliver straight to the IRS or to, that would be in the United States, but you guys don't integrate directly to like the governmental offices.
No. But depending on this country, do you know what country that is? The flyer.
Depends. I can't see.
In the question. Oh, you can't see it. But to your point, correct. CoinLedger auto generates your IRS tax forms that you need, but it's still either up to you to give those to your accountant if that's how they're actually filing your taxes, or if you use TurboTax or H&R Block, you'll import our forms into those. And so it's not like when you finish CoinLedger, we're just sending things to the IRS right now. For these other countries, we also don't do that.
Yeah.
So no.
Yeah, right. Lucky Concept, for him, it might work out pretty well. But like for me and maybe some other people, maybe we don't want to send it to the government first. Maybe we want someone to double check. Like my CPA, she always tells me, she's like, okay, I'm missing some information. You have more deductions. Where do they go? Okay, let me search for those. Okay, now this part right here, I have a question about this. And she kind of goes through it to kind of keep me out of hot water, but also to maximize or minimize my tax I have to spend. But again, everybody's different, and go from there. Seth says, I dropped my taxes off at the accountant's office yesterday, and they didn't seem happy about my missing cost basis. I guess this would be a question like, what do you do in this situation?
Well, I would recommend working to solve those missing cost basis transactions. We staff like a 24/7 support team during tax season, and they're really, really good at helping our customers figure out what sources of missing data or what could be the cause of you missing cost basis. Now, it's always something is wrong with the data you've imported. Maybe you've missed importing from some exchange that you originally bought some on. Maybe the exchange you use only gave you a year's worth of data. There's a lot of reasons why there can be little problems depending on the platforms you use, and our support team helps thousands of people every year. So I would recommend you reach out to us, and we'll take a look at your account and try to help you solve where is this missing data stemming from.
Yeah, and that's like that would be this one point, because there was an issue with my portfolio. Because if you guys don't know, there is a portfolio tracker, and it's free. If you go to CoinLedger at the very top and just click on portfolio tracker, you can sign up, and it gives you like a cost basis. Now, this isn't mine. This is just a dummy account that David was nice enough to set up for me so I could show this to everybody. But like, let's say, for instance, like you're like, okay, 1.7 Bitcoin. Like, okay, I don't have 1.7 Bitcoin. How is this? And you can go to the asset balance sheet, and you can figure out like, okay, it says here's the inflows and outflows, and there's something missing. Okay, well, then I have to fix this. And one of the ways that David talked about, he goes, just go to the import. And if there's something that's just not jiving, first of all, it might be an issue with an API integration. So just wherever it was from, on that situation, it was Coinbase. Just delete it, reintegrate, and go from there. And then if it's really wacky, then reach out to customer support. But I like to take a look at the portfolio first and go from there. And then for cost basis, if you're thinking to yourself, well, like there's some things that are kind of above my head. If you like the question about, they're not very happy with the cost basis. If you go to CoinLedger scroll all the way down, and the very bottom right-hand corner, it says find a crypto tax expert. If you're not familiar in your area, you can hire any of these guys and talk to them. They're reasonably priced. Some are a little crazy, but not too bad. So that's what I've recommended across time. Anything, and Dave, anything about that one?
No, I concur with all of that. And always, our team is down to help. So reach out to us.
Cool. How about this one? Say I haven't filed taxes since 2020, which is no big deal. We've all been there, right? And I've made several hundred transactions across 10 plus platforms. Sounds like my kind of trader. Where would a good place to start be? First of all, do you have to do anything special if you haven't filed for like 10 years? I mean, excuse me, for like 3 or 4 years.
Well, if you want to square up with the government agencies and you don't want to expose yourself to potential problems, because obviously in this hypothetical situation, you have committed some form of tax fraud, to put it lightly. But with CoinLedger, there's nothing special you need to do. And where would a good place to start be? I would recommend getting all of those 10 platforms that you've used imported into CoinLedger. CoinLedger will sort through all of that data and will show you what were your capital gains, losses, and income for each year since 2020. And you can look at that data. You don't have to do anything with it. You don't even have to buy it from us, but you'll see it at least, and get squared and see what your exposure may or may not be. Because keep in mind, if you lost money, technically you don't have a tax bill.
Exactly, that's true.
But if you do have significant income and you do want to square up with the IRS, you would simply amend your old tax return, right? And there's tax accountants that could help you do that, or you could do it yourself. We have blog content on CoinLedger talking about how to amend the prior year's tax return. And you would essentially use the forms that CoinLedger generates for any of those years, 2020, 2021, 2022, and use that to amend your old tax return. Now, you may have to pay some additional taxes that were left out on 2020 or 2021, right? But that's would be how I would recommend going about it in this type of situation.
Yeah, and usually, like everybody on this channel knows, I was audited in 2000. Gosh, when was it? 2013 or 14, somewhere around there. And they just brought me in like, hey, this doesn't make sense to us, so you have to walk us through it. So I had to go into the IRS office. I had to bring with all my receipts and go through everything. It took a week. And at the end of the day, or at the end of the week, they said, okay, you owe us another $4,000. I'm like, all that for $4,000? All right. And there's also a penalty because you didn't. I'm like, whatever, fine. And that's just kind of how it is. I mean, unless you're like, this is the kind of vibe I got from the IRS agent, which was, unless you're like a big whale, they don't really want to destroy you. They just want a little bit of money. And I know there's a big thing up on the Hill where somebody like Senator Elizabeth Warren will say like, hey, these IRS or these crypto cheats are getting away from the capital gains. We're not. I don't know how many people made a bunch of money last year. It wasn't me. So we'll see how it goes from here. But I look at these, I'm like, it's not as bad as I think people think. All right. One more for Jat. He says, if staking hasn't hit the wallet, but accumulation in the staking platform itself. So let's say you're on DNews with Cardano staking pool and you just let it accumulate in your wallet. What point does it trigger a taxable event? I think this one was a very tricky one. It just depends on your CPA and your ideal.
It's just a little bit of a gray area. In the test is, do you have what's known in the tax world as dominion and control over the asset? Meaning, do you, as it's incurring to your staking platform, at that moment have the ability to move it if you wanted to, right? Sometimes they're locked up and you can't. But if you do have that ability, it can be argued that even as it accumulates in that staking account, you are incurring income. But this is a gray area, right? Some people, right, if there is a mechanism to cash it out from the staking account, that can also at times be what's triggering the taxable event. So I can't speak in a one size fits all answer to this question, but it has to do with when do you actually have ownership or dominion and control? When can you move and freely take those assets? That's technically when you've had an ascension of wealth, and that's when the taxable activity or event would happen.
Yeah, and that's when like these guys come in to kind of just say, okay, on this situation, do this, on this situation, do that, and then they can refer to them. And then of course, like if something happens with your government or your wherever you're at, you can refer to them and say this, these guys help me out, and we can go from there. A couple last ones. I like this question. How long can I go without filing a tax return in the U.S. before there's a knock on my door?
Exactly 3 years and 4 days. No, there is no answer to that question. If there was, maybe we'd have a lot less tax compliance. But I think that's part of the problem is you never know. You're just running a risk, and so if you want to run that risk, I can't stop you, but you're incurring some amount of risk by not paying your taxes.
You are. How about this one? How do I manually input USDC given to me in a long-term loss? Sorry, on a platform not supported by your site. How would this work out? Manually or just wallets?
Mm-hmm. Yeah, so advice on how to manually input USDC given to me on a long-term loss. I don't follow what you mean by long-term loss. Does it mean
maybe this is, I'm just going to guess, maybe this is like they had Bitcoin. Maybe this is in an FTX, not an FTX, a Celsius or Voyager situation where they had to swap things over and they give them USDC or something, because usually you don't have a long-term loss on a stable coin.
Right, exactly. That's right. So if it is tied to one of these bankruptcy cases, I would recommend you watch our prior video with Jordan, because we talked a lot about this. But in a simple form, if you had Bitcoin or something like that, and then you got USDC back, that is a taxable event, and that can be written off on your taxes because you incurred likely a loss. How to get that into CoinLedger? You could manually import it, essentially saying, hey, I bought 1 Bitcoin for XYZ, and I got back this much of USDC for it. Our guides on the Celsius one that we linked in this video, as well as our guide on Voyager, will walk through the mechanics of that if it is tied to one of these bankruptcies. But you can manually get that into CoinLedger, even if we don't support it automatically.
Gotcha. How about this one? I'm also curious about transaction fees. Is that included in CoinLedger? I forget.
Yep. Yeah. So transaction fees will either add to your cost basis or reduce from your proceeds, depending on the transaction itself, which in either way is going to reduce your tax liability. So they are all factored in. And when we factor them in, we're lowering your taxes for you.
Yeah, especially if you're using Ethereum, you're probably broke. So let's see. How about this one? Talk about first in, first out, last in, first out. Can you change something? And you did a pretty good example of this in the last video. If you can just run through that real quick.
Yeah. So Sandy is referring to inventory costing methods, and it's essentially the algorithm that CoinLedger and any accountant would manually do to determine which asset and which tax lot you're selling. So a quick example, let's say I've bought Bitcoin 3 times in my life. I bought one at 10,000, I bought the second at 20,000, and I bought the third at $30,000. Let's say then I go sell one. Well, which of those 3 am I actually selling off, right? Because you need to know that to determine your capital gain or loss. And so if we're using FIFO, first in, first out, throwback to accounting 100 classes, you're going to sell off the first Bitcoin that you acquired, which in the example I just gave was $10,000. If you sold it for 50K, that's a $40,000 capital gain you incurred. But if you're using LIFO, last in, first out, I would sell off the third Bitcoin I acquired, which I said I acquired it for $30,000, and my capital gain in that case would only be $20,000, right? So, you can determine the costing method that you want to use in CoinLedger. I would recommend keeping that consistent year to year, because you don't want to double dip on which tax lot the algorithm is pulling from. In a period of rising prices, FIFO is going to lead to a higher taxable outcome. In a period of declining prices, FIFO would lead to a lower tax bill. So research it, discuss with your tax professional which method you want to use, but then I would recommend sticking to a specific one.
Gotcha. How about this one? Are you responsible for the previous year's crypto income tax if you never filed? Or can you just blame somebody else?
You are scot-free. You don't have to. No. Yes, you are responsible for your income in all years not just crypto, all income earned in the US is subject to tax, and you are responsible for paying taxes on that.
Exactly. How about this one? I got 4 different centralized exchanges. Can CoinLedger calculate my total cost average across all? I think let me take this one. So if we're looking at your portfolio tracker, I mean, just in the portfolio tracker, you can, I mean, for this one, it'll tell you the cost basis. It's multiple different exchanges. I think you guys used Kraken, Coinbase, and one other one, and it can tell you the cost basis. I think David, if you drill in, can't you get
Yeah, actually, it's just right over there. So that it'll say your total cost basis and then the per coin cost basis, which is just the average across all of your holdings.
Man, I wish this was real.
But yes.
13. I mean, wish it was mine. 13,000 per Bitcoin. That'd be sweet. All right. And I think, let's see. Let me get to. Thank you. Hearts.
You are welcome. Thank you.
And that's it. David, look, this was great. I appreciate the very simplicity that we have. But everybody, again, if you're looking for something to help you with taxes, something to help you to get through this rut, there's a link in the description. Again, the portfolio tracker is free. The cost for the program itself is actually quite inexpensive. I mean, if you're talking about like time, look at this real quick. If I could just get to it. There, pricing. So first setup is free. You just want to just look at your transactions, revisions, and all that stuff. That's great. If you're a hobbyist, like as far as like transactions up to 100, it's $50. Investor up to 1,000. If you're like most of us, a bunch of degens, $200, but it's like unlimited transactions, 3,000 plus. So that's pretty reasonable for me, especially for peace of mind. But that's it for today. So David, thanks again for stopping by, man. We appreciate it. Everybody, links in the description. And on your way out, like and subscribe, and we'll see you on the next one. All right, everybody. Adios.